Traders, welcome back to our price action trading lesson. We're looking at S&P 500 M&A futures. The time frame is 2000 tick chart, and today is the FOMC announcement day, which means a lot of times the market can be very slow and choppy prior to the announcement, and after the news there can be spike in volatility. The market can be very fast, so this is something you need to take into consideration as a trader, that these FOMC days tend to be uneventful and quite choppy. We also had another spike in volatility, another news before the open that completely distorted the price action. There was a nice triple test with 0 to like a pullback, and now you can see we have a new high, but at the same time I can't be thinking about selling because we traded up into this was massive bullish momentum present in the market. And when I see such a massive distortion, all of these bars are so tiny, I generally like to wait for a while to get more price action, to get more bars printed, so the picture is easier for me to navigate. So make sure if you have such a spike in volatility, you can see all these bars are tiny, it is hard to find a pattern. Just wait for a while, see more candles on the chart, and eventually it will be easier to understand where the market is heading. So right now prices are pushing above EMA, and finally it is easier for me to understand what is happening in the market, because we have a spike up, we have a series of high highs and high lows, which means there is some trend, and this looks like a spike and a channel pattern. So I'm going to connect all of these swings at the bottom, and in fact it fits really well. I'm going to copy it, put it at the top. So spike and a channel fits well. So right now the bias of the S&P is bullish, which means I'm not thinking about selling picking top. I want to see pull back to the EMA or the trend line and take a high probability setup, second entry long at the EMA. Okay, so you have a new high for the central long. Now we formed a second entry long, but problem is, as you can see, we broke below the EMA, and I can also draw downtrend working lower. Because it is below EMA, this is not something we want to see. We want to see EMA holding in the trending market, because it's a sign that the bulls are buying at EMA and it acts as a support. So I'd like to see the push above EMA resumption and a high-low confirmation setup. That never formed. In fact, we broke the latest highest high, and as a trader you always have to reset the count when the new high is made. Okay, so first entry long exceeded, count reset. First entry long, can I get a second entry long? No. Count reset again. So this is how you use counting technique. I'm going to redraw the downtrend working lower. I'm still counting for second entry long, another first entry long below EMA, so I still want to see push above EMA and a second entry long above EMA high probability setup. That never formed. Market was strong, and in fact it was so strong we have overshoot. So if I'm going to zoom back, you can see there is push phase, correction phase, push phase, correction phase, push phase, small correction phase, and overextended push phase. You can see it doesn't look healthy. There is no equilibrium. This is overbought area, which means you can expect stronger pullback in the opposite direction. This is important because you can have stronger downtrend. Sometimes overshoot can even lead to a reversal of the market conditions. So there's going to be a second entry long at the EMA after overshoot. You would have to skip because the downtrend can be a little bit stronger than just this ordinary normal correction. Okay, these corrections are very weak and tiny because the trend is in play. Now we have overshoot, so the correction can be longer and stronger. So market keeps working lower. We have first entry long, but at this point I'm not really interested in second entry long because the downtrend is in play. We have overshoot, so at this point I'm leaning back. I want to see break new low. After new low, that's a sign that the downtrend played out. Then I'm going to be observing if we can push above EMA and get a failed second entry short. So let's see what's going to happen. Market is correcting. Okay, I'm not interested. Breaking new low, so downtrend played out. Okay, you have a break and a new extreme, so this is good sign for the bulls now. So now I want to see push above EMA. Will high low be enough? Well, not really, because we have the overshoot. I would really like to see the failed second entry short given the overshoot, but if you get textbook high low above EMA, maybe, but you really like to see the failed second entry short. We have a new low first entry short. Can we push above EMA? We have a failed second entry short, but of course you cannot go long above horrible bearish bar. So there is no failed second entry short for us to consider, because you simply need to see break below, reverse a bar, get some nice bullish bar, and then you can consider. So you cannot go long above horrible bearish bar. And you can see market continue trending lower. This is important. Why is this happening? Okay, downtrend played out. So this means there can be stronger bearish momentum. So at this point I'm really confused because I have to pause looking to go long. At the same time, we traded up the entire day after the spike news, so I have to still expect new high to be tested. Let's see what's going to happen. We're pushing above EMA, quite strong spike. Can we draw the downtrend working lower? Okay, we have a high low. Can we consider high low? Not really. I would really like to see the failed second entry short, giving the overshoot, also the downtrend right now. This was quite significant correction, so we can treat this basically as a first entry long only. Can we get the second entry long? No, we're breaking back below EMA, and right now, okay, the market is too bearish. We're probably going to reverse the market because the overshoot generated such a strong bearish momentum. So at this point, I have to pause looking to go long because we simply cannot even stay above EMA for a significant amount of time. So let's see what's going to happen. In fact, we have a failed second entry long, new high, first entry long, pullback, second entry long failure. And when I was watching this, I was still thinking about some possible high low, but as you can see, EMA flattening, we never really formed a high low. I don't think you can take it. Failed second entry long, in hindsight, this doesn't look that bad if you are leaning more bearish. Failed second entry long, problem is the EMA is flattening. You know, you can consider if you are leaning more bearish at this point. And once we broke down lower here, another series of lower highs, we have to adapt. So we're gonna draw some wider downtrend, something like this, copy it, put it at the bottom, because clearly after breaking new low, another push to new low, another push to new low, there has to be some stronger bias. We cannot push above EMA. Every single high is lower than lower. So the overshoot is still important in the market. Okay, now we have new low, first entry short, second entry short. Uptrend played out with the break and a new extreme. And this is the second entry short off the trend line. So you can consider taking second entry short off the trend line. By the time you get a lower high, you cannot go short below this horrible bearish bar. Okay, and now we have 1 hour before the FOMC, which you generally don't want to be trading 1 hour before the FOMC because it simply completely slows down. All traders are patient. They are all leaving their positions, and you can see, just be patient prior to news. And now the FOMC kicked in, big spike in volatility, so let it subside for a bit. You don't want to be trading exactly after the news because you can get whipsawed. You know, there can be spike in volatility even if you get the direction right. Sometimes what happens is, let's say you're shorting, it's gonna go higher, quickly spike up, take your stop out, and then it's gonna go all the way down here, exactly where you thought it was gonna go. This is exactly what happens during these important spikes in volatility, these important news. So it is better to not be trading because you can also get slippage on your stop loss, so you can have massive loss. So just avoid trading these very high impact news because it is simply gambling and it is not worth it. I know a lot of traders, they're always trying to figure out, you know, how to trade these high volatility news. In the long run, what you will find that it is more gambling and you cannot really make a consistent profits trading news. So make sure you're gonna be patient here, let it subside and wait for prices to go back to normal because they will subside a little bit. And today it wasn't so bad. It wasn't so volatile, so we can be trading fairly quickly after the news. Break new high, break new low, break higher, and now we have new high, first entry long, second entry long, which is also new low, first entry short pullback, second entry short failure. So we have a double high probability setup, second entry long, failed, second entry short. EMA flattened, downtrend played out. This option is new high, there's more support, and this is decent high probability setup, second entry long, and a failed second entry short. We have a break in new high. At this point, I had my resistance like this. Flat EMA, consistent price swings up and down. So as a trader, you understand this is not a trending market. This is some form of a trend range, which means you have to look for some key levels and you have to follow short-term channels. Okay, there is no failed second entry long below EMA. It broke higher. Okay, break. I don't see any good setup. We have a lower high here, but it's still above EMA. You know, also 4.75. You can see the bars are quite big after news, so you know, not that great of a setup, but it is a lower high. You know, confirming the failed breakout, and I'm looking at it, you can consider. But when you're watching this live, you know, the bars are big. It is still quite fast after the news. But in hindsight, this is decent lower high. Confirming the failed breakout, this is a trend range. Break new extreme. Break a new high. You know, we can't take failed breakout because the single bar is bullish. And by the time I get a bearish bar, it is just way too big. The scalp was made, so I can't really take a failed breakout. Market is working lower, so I want to see some lower high. This is a horrible lower high. Of course, I cannot short below this bar. Bullish body so far down. Not good. Can I get a second entry short? No. Break. New extreme. Actually, micro double bottom. Now we have a break and a new extreme. So At this point, what we're going to do, we're going to apply trend range rules because this is clearly flat EMA, consistent price swings up and down, neutral bias after news. Resistance is getting confirmation. Support is getting confirmation as well. Downtrend played out, so we can start anticipating market go from bottom all the way to the top because this is exactly what happens in trend ranges. Smart traders buy low and sell high. Okay, we have push lower, we have a little failed breakout, and now we have high-low confirmation setup of the failed breakout. You can see the bearish pushes to the downside are smaller and smaller. It is dissipating, and this is decent high-low confirmation setup. It was quite hard to catch because it happened super fast. Can we get a failed second entry short? Reverse a pattern, new low, first entry short pullback, second entry short failure above EMA. No failed second entry short, so at this point what I have to do, I have to look at the beginning of the move, connect these swings, draw an uptrend, copy it, put it at the top. I'm thinking about second entry long at the EMA because we're heading to the top of the trend range. We only had first entry long. We're breaking the uptrend. So what do you expect? Okay, you expect new high for this uptrend. Even though you are in a trend range, you still expect new extremes for the trend range. Excuse me, for the channels, for the trends. Sometimes the new extremes may not be fully tested because the buyers or the sellers will step in the market near these important key levels. But this was such a clean and sharp uptrend. If the EMA is going to be holding, you are still expecting new high to be tested. Okay, so don't abandon the trend line rule even when you're trading in trend range, because you can see break a new high reversal, break a new low reversal. Market still follows the shortened trend line rule. Inside of trend range, you have first entry long. By the time you get a second entry long, the body is so far from the EMA, the signal bar is not that strong, you can't really take it. It worked, spiked to a new extreme. You're not really fading the breakout because EMA keeps rejecting every single time since the uptrend started. So this is too steep. We have a break and a new high. Market keeps trending to the downside. Okay, this is significant. Failed breakout. Brand new downtrend was established. We're back into trend range. Trend range rules played out. This downtrend is in play, so I'm thinking about second entry short at the exponential moving average. And now, not even a pullback, we just spike down, break an extreme, and now it's getting way too late. So this is the overall structure for today. I rushed the chart lesson today more than usual because it was a very uneventful day. Prior to FOMC, almost nothing happened because we have a nice uptrend working higher, but no good setups on the way up. Then you have overshoot, and because prices are struggling to break above the EMA and stay there, this is a sign that we cannot get the new high. There are so many low highs. At the same time, when I was watching this live, I was just really patient because I don't really want to go short, I don't really want to go long. It is too neutral. The overshoot is generating stronger bearish push down, and after FOMC you would expect some nice trend to be established, but once again we were too sideways. Couple setups here. These setups are really nice. So typical FOMC day. I hope you didn't take any impulsive setup trying to fill the need to take an entry. Remember, if the setup is not there, if nothing is aligning the context key entry point in the pattern, you just simply have to be patient. Let's hope tomorrow is going to be better. I'm going to wrap it up and I'm going to talk to you next time. Good luck with your trading.